A very good afternoon, everyone. The Banking, Financial Services and Insurance Board of the Institute of Cost Accountants of India is happy to announce July 2024 as the Banking Month. And today we are having the second webinar on the very crucial topic DEFI, Decentralized Finance or Lending today. And we are really honored and privileged to have with us as chief guest today, Sri NDSV Nageshwar Rao sir. He is the General Manager, IT Loans and Trade Finance, State Bank Global IT Center at Mumbai. We welcome you, sir.
Thank
And
you,
we
ma'am.
also have, thank you, sir. We also have our very own speaker today, CMA Dr. P. Sivarama Prasad, sir. He is the former Assistant General Manager of the State Bank of India. We welcome you, sir. From the institute, we have CMA Chitranjan Chattopadhyay, sir. He's the chairman of the Banking, Financial Services and Insurance Board of the Institute of Cost Accountants of India. And CMA Dibyendu Roy, sir, is the additional director and HOD of the BFSI board. And we also have our team members. So we welcome all of you. So just before we start, we are playing the institute anthem, and then we will continue with the program.
असतो मा सद्गमय तमसो मा ज्योतिर्गमय मृत्युर्मामृतङ्गमय
मा सद्गमय तमसो मा ज्योतिर्गमय मृत्युर्मामृतं गमय
असतो मा सद्गमय तमसो मा ज्योतिर्गमय मृत्युर्मामृतं गमय ॐ शान्ति शान्ति शान्ति।
So now I would request our chairman, sir, CMA Chitranjan Chattopadhyay, sir, for his welcome address. Please.
Thank you, Madam Indakshi. Very good afternoon to you all participants. Today is the second, webinar, and today is a very auspicious day for the bankers, even all the citizens of the country. Those who are taking the advantage, who are reaping the benefit of the whole banking system. This 19th July 1969 is one of the very auspicious day, I think, because Indian financial system got stabilized with the help of the Indian banking system when it got nationalized. Of course, Indian nationalized banks have contributed tremendously for the growth of this country, nation's growth. And myself being a public sector banker, ex-banker, I also feel privileged to be a part of this journey of this growth. And today we are delighted to have our presence of one of the very successful banker who happens to be one of the doyen, Mr. NDSP Nageshwar Rao, as a chief guest on this webinar. This webinar is a very, from today how banking journey is being migrated from manual banking to this automatic banking, and this is continuously we are evolving with the many facets, many developments, and this should be dealt by our own personality in our CMA fraternity, Dr. CMA Sivarama Prasad, who is also a very successful banker. Today I'll be very happy to just tell you the ongoing fintech revolution in India is currently in progress, presenting a distinctive opportunity for advancing financial inclusion, enhancing financial sector efficiency, and generating fresh economic prospects for a large populations. India has established a set of open application programming interfaces, which is APIs, and digital public resources that can be utilized by the sector to foster innovation and support both financial and social inclusion. The strategy adopted by the Reserve Bank of India prioritizes maintaining a balance between fostering innovations and implementing regulatory measures, all while upholding the fundamental principles of caution. The fintech industry must also consider implementing safe regulatory measures to effectively tackle issues related to technology, ethical considerations, safeguarding customer interests, and ensuring data privacy. Our nation stands at a pivotal moment to demonstrate its leadership role within the fintech domain, particularly concerning digital payments framework. Despite India's considerable advancements in building its internal payment system, which have gained international recognition, the country also has the potential to pioneer advancements in global payment systems. Within this framework, central bank digital currency exhibits substantial potential. Given India's current CBDC pilot initiatives, the country is well positioned to lead discussions on the necessity for cross-border CBDC interoperability and establishment of standards for seamless interactions, aiming to realize the benefits of cost-effective, efficient, and swift cross-border transactions. I am optimistic and sure that the insights shared by the participants in this webinar will delve deeply into the opportunities and challenges surrounding innovations, inclusivity, and regulatory aspects within the fintech era. We welcome your valuable recommendations to the BFSI board of the institute. Please communicate your suggestions via email to bfsi@icma.in. And I just want to mention before all of you that we are going to launch our fintech course very shortly, and our Dr. P. Sivarama Prasad will be the architect of this course, and we have from the institute level we have taken many suggestions from others, and ultimately you will be launching this course for the benefit of all young CMAs and those who are already on the job. For the bankers also, we welcome you to be connected with us so that we can more serve the banking system, and we assure you the best of our services from the BFSI board, which we are looking for the entire country, that our cost and management accounting profession will be simply contributing for the cause of the growth of the banking sector and to reach to the unreached with this fintech module. With this, I am welcoming again you all, and I am sure that today's program will be one of the memorable occasion for you to know what is DeFi, and this DeFi will definitely be a memorable one for you. Thank you.
Thank you so much, sir. Having the privilege of introducing our chief guest today, NTSV Nageshwara Rao, sir. Sir is presently General Manager IT Loans and Trade Finance, State Bank Global IT Center at Navi Mumbai. His role covers handling IT applications of rupees 40 trillion loan portfolio of the bank. Previously, he was a General Manager IT Special Projects, taking care of IT applications. He was also the Deputy General Manager, Sales Head, Financial Inclusion and Micro Markets, State Bank of India, covering Tamil Nadu and Puducherry. He has worked as Deputy General Manager Analytics in the Global IT Center, SBI Navi Mumbai. He has handled the agri-business planning in SBI Corporate Center Mumbai, playing major role in policy making and implementation in banking related matters. He has spent 5 years in banking research conducting management studies for SBI. He has spent overall more than 34 years in banking business operations across all segments. In addition, he was a director in Tamil Nadu Warehousing Corporation during 2020-2022. He has many notable achievements. I am mentioning a few of them. He has participated in the international seminar on rural finance based practices at Beijing, China, conducted by Asia's Pacific Rural and Agricultural Credit Association. He was the member of team which received the Macro Research Award on evaluation of BCBF model from the Indian Institute of Banking and Finance in the year 2010 and 11. He has got All India second prize in the Micro Research Paper Competition 2010 conducted by the Indian Institute of Banking and Finance. He has completed Digital Leadership Program from the ISB Hyderabad. He is Master of Business Administration from IGNU, Certified Associate of Indian Institute of Banking and Finance, Postgraduate Diploma in Financial Advising from IIBF, Oracle Certified Professional in Database Administration, Certificate in Risk in Financial Services of CISI London, I mean, many more. No, we are really privileged, sir, to have you with us today, sir. So now I would request Nageshwara Rao, sir, for his address.
Thank you. Good evening to all of you. I thank the organizers of this webinar for giving me an opportunity to participate as a guest. In addition to my mother institution, SBI, I feel the same warmth and affection whenever I attend the sessions of ICMAI. Thank you all for this affectionate gesture. I thank the institution for such a wonderful introduction about me. Now I will directly come to the point. Today's topic is DeFi, Decentralized Finance. But I will give a different acronym for DeFi, saying DeFi means developing enablers for fintech integration. Developing enablers for fintech integration, which is really happening right now. I will explain in detail. One of the major factors for financial development in the last few years is digitalization. India has witnessed a digital transformation in its financial space, with digital innovations being the corner stage. They are the center stage. The government's push for digital economy, coupled with advancements in technology, have led to more and more digital payment systems, and then online banking and blockchain applications. All these developments have started, I can say, with the launch of Aadhaar, a unique identification system, which is part of India's stack. Aadhaar, along with Jan Dhan Yojana, both have accelerated the financial inclusion journey in the country by improving the bank account enrollments. Now, when we come to the credit area, a study by TransUnion CIBIL states that nearly 35 million new to credit customers were enrolled to the financial system in the year 2021. Whereas the same report states that another 31 million became new to credit customers in the initial months of FY22 only through the fintechs. So, while banking services are expanding beyond the exchange of money, making payments, giving loans, etc., the youth need instant solutions and they are going towards the fintechs. A report by McKinsey states that a whopping 70% of the overall digital payment transactions currently are being captured by fintechs. So they are able to capture a very sizable number in the digital payment space. Coming to digital payments, RBI's Payment Vision 2025 states that they want to triple the numbers in digital payments in the next few years. So this indicates that there is a huge opportunity for the fintechs to come up in the coming days. So banks, which are stalwarts in the financial industry for a long time, they have confronted this fintech innovation with two distinct strategies. One is, like any other area, they have embarked on internalizing the innovations, positioning themselves to the changing requirements and competing with the fintechs. That's why Moody's Investor Services says that dominance of the digital payment gateways may not necessarily translate into competitive advantage for them, because banks are also upgrading their technology platforms on a large scale. And at the same time, they are giving more and more digital offerings nowadays. But at the same time, banks know that fintechs are here to stay. So they have applied another strategy, which is shifting their approach from competition to collaboration. This collaboration may be of different varieties. Maybe it may be by way of bilateral relationship or entrepreneurial partnership, or by leveraging their services, that is fintech services. So this symbiotic relationship will ensure few things. One is banks will be responsible for establishment of the regulatory framework, ensure KYC standards, monitoring of the transactions. At the same time, fintechs will give the enhanced agility, and they will also ensure better understanding of the consumer behavior, because that is the crux of the requirement nowadays. So in this entire journey of banks, fintechs, economy, all those things, RBI plays a very central or pivotal role, because they have to create an environment which will be conducive to innovation and at the same time ensuring the financial stability. So for this purpose, whatever RBI has done is like they have come out with regulatory sandbox. They have conducted so many hackathons. They came up with a special fintech department within RBI. And also they came up with a Reserve Bank Innovation Hub, which is doing a phenomenal work in the area of innovations. So with all this, what I want to say is, as I told in the beginning, DeFi is developing enablers for fintech innovation. This is what really happening nowadays. But this enablement, what I am referring, is related to the centralized finance, that is SEFI, which is based on the traditional financial model, in which intermediaries such as banks, financial institutions, and regulators all will play the central role in doing the financial transactions. But today's topic, which is DeFi, which is like a new technology or an emerging financial technology based on secure distributed ledgers, which are being used in the cryptocurrencies. So this is a new technology wherein they want to remove the third parties and even the regulators from the financial transactions. So this is practically a new thinking or a new direction, which is almost a contrary to what we are doing right now. RBI's Financial Stability Report, June 24, which was released recently, they also state that international regulatory authorities like Financial Action Task Force, they are also keenly observing the developments in the space of DeFi, because they are having the concerns of the rapid growth in such segments could have implications for the broader asset market and global financial stability. In fact, United States is coming up with a new act, Financial Innovation and Technology for the 21st Century. It is FIT 21. They are calling FIT 21, which is intended to provide market certainty, grant legal recognition to digital assets, and allocate jurisdiction to institutions like Securities and Exchange Commission. The world is contemplating to create a proper structure for this new financial innovations like DeFi. So, being a traditional banker for the last 34 years, involved in SEFI, that is centralized finance, for all these years, DeFi is really a new terminology or technology which is coming up, which I am regularly reading in various newspapers and magazines, etc., and trying to understand what is going to happen in the next few years. Here, I will be concluding my opening remarks to listen what is in store in the form of DeFi from my learned friend, Sri PSR Prasad, who is known to me for more than 20 years. And whatever Madam has told about my certifications, etc., they are very, very less when compared to what Sri PSR Prasad sir is having, because he is like a guru in so many areas. So with this few words, I thank the organizers once again for giving me an opportunity to participate in this webinar. Thank you all.
Thank you so much, sir. So now introducing our speaker, CME Dr. P. Sivarama Prasad, sir. He is a qualified professional in cost accountancy, company secretary, finance, commerce, insurance, and banking, with experience of 36 years in banking and financial services, with cross-cultural experience and good knowledge in the insurance sector. He is a fellow member of ICSI, the Indian Institute of Banking and Finance, Insurance Institute of India, and he is a fellow member of the Institute of Cost Accountants of India. And he's the former regime of SBI, and presently he is faculty of PFSI courses, and he is our mentor also. So thank you
Before,
so much, sir.
madam,
Yes.
before Dr. Prasad takes charge of the whole session, I just want to convey my heartfelt thanks. Please put me
Yes.
in live, say live. Please put me
Yes,
live.
sir.
I want to convey my heartfelt gratitude and thanks to Mr. Nageshwar Rao. Sir, that today your feat you have told to us. This is also not known to us, and I understand that every day we have to learn. Now the situation is coming like that, and already banking is a vast sea. It is now converted into the mega sea or whatever it is. I do not know, because we have to learn, unlearn, and relearn every day. Sir, I request you. We are contemplating to have our fintech course to be launched in the fintech city as declared by our honorable chief minister of Andhra Pradesh, Naidu ji. So, sir, I will invite you, sir, if you can get time, please come to this function and you please tell about this, because we want to have a grand program on this session, on this particular occasion of launching the fintech course. Sir, we'll be in touch with you, and I'll be definitely meeting you personally also to convey my heartfelt thanks to you, sir. Thank you.
Thank you, sir. Thank you.
Thank you so much, sir. So now I would request our speaker, CMA Dr. P. Sivarama Prasad, sir, for the session for handing over. I'm handing over to him now. Sir, please.
Okay. So good evening to all. First of all, thanks to the chief guest, Nageshwar Rao sir, for giving the welcome address, particularly with regard to developments that are happening in the fintech world or technology in the banking system. I also thanks to the BFSI board for giving me the opportunity to discuss about DeFi finance. So up to 4 o'clock, whatever the best is there, whatever the knowledge I am having with regard to DeFi, I will discuss in detail in a simple and a lucid language. Now, everybody knows about technology is day by day, it is increasing in the world, not even country. Earlier, manual systems are there. Now all are technology related. And people are also inviting, because the technology is giving a lot of comfort to the people. And at the same time, it reduces the cost. It increases the convenience of the people. Convenience to complete their whatever the financial or non-financial transactions there. So fintech companies, particularly financial technology companies, are also increasing day by day. So the tomorrow banks are IT companies only, because IT people, they are having the good knowledge, particularly how to convert the financial sector into fintech. So one of the area in the developments, particularly in the fintech developments, is DeFi. Up to 4 o'clock, I will discuss about the brief about the DeFi. And anyhow, our initiative is also going to conduct the fintech course shortly. And the just now, chairmen are also told that they are going to inaugurate the fintech course at Vishakhapatnam. That is identified as a fintech hub. Particularly the chief minister of the Andhra Pradesh, he announced that Vishakhapatnam will become the fintech hub of the country or state like that. Now coming to the subject. First of all, we are dealing with the technology. So that's why the disclaimer is also there. The following statement, what are I am going to discuss all these things. not constitute investment advice or any other advice on financial services or financial instruments or financial products or digital assets. And they are intended to provide general information only, than nothing else. Why? Because fintech, whenever we are entering into that field, the advantages are there. At the same time, disadvantages are also there. But advantages are more when compared to the disadvantages. So that's why this disclaimer. Before going into the subject, a small case study on technology products. An individual promptly expressed to decide to travel Chennai from Mumbai via airlines to participate in an interview scheduled for following day. The individual endeavors to secure the air tickets using online banking, that is internet banking, with the available funds of 10,000 in his savings bank account, while airfare cost is around 9,000 like that. Owing to the bandwidth issue, particularly the technology bandwidth issues are there. With the realm of information technology originating from either bank end or the airline end, some bandwidth issues are there. The individual account was debited, that is savings bank account is debited, without issuing a air ticket by the airline. Amount will be refunded within 7 days. Some message is coming. Amount due to out of funds, and due to out of funds, he is unable to purchase another air ticket from the other airlines. This is a situation of an individual. At the same time, it gives a lot of advantages and disadvantages. Sometimes it will be there. We have to bear it. We have to bear it because we are testing the technology products, and at the same time, sometimes it may create some problems also. Consequently, the individual lodged a complaint or grievance seeking redress for being unable to attend the interview at the designated time due to technology issue, addressing both the bank as well as airlines companies or organization, and he is raised a compensation amount of 5 lakhs. And both entities are invoked the disclaimer clause, stipulating that organization bears no responsibility for technology or communication impediments, thereby denying any form of compliance. So here, if at all you want, you use it, but at the same time, whatever the issues are the technology, we will try to address all the technology issues, but sometimes it is out of our hands. So that's why they completely denied, because while opening the internet banking also, the system is automatically asking some disclaimer clause. Simply we are ticking and going, but we are not reading what is the disclaimer clause. Banks are also, whatever the technology products they are going to use, all are subjected to some issues. That is, you have to bear it. Next, moral of this case study is the underlying lesson is derived from the scenario of underscore the dual nature of technology. Technology is a dual nature, emphasizing both advantages are there, at the same time disadvantages are there. And thereby, advantages are more when compared to disadvantage. But once some disadvantage is there, we should not blame the technology. Without technology, today it is very difficult to survive in the country. And if at all IRCTC stopped the reservation online and asked you to go to the reservation counter at railway station, people will resist that one. People will do the dharna. No, please introduce the IRCTC like that. Sometimes while booking the tickets in IRCTC also, your account will be debited and the tickets may not be generated. All these issues are there. Hence, Future fintechs are also no exemption in this type of events or situation. So fintech, a lot of advantages are there. At the same time, disadvantages are also very few are there. But the advantages are more and the life will be comfortable while using the whatever the technology products, whether it is a financial or non-financial products. Now, I am not directly taking to that DeFi because you have to understand some basic concepts. Then only in the end, I will take you to the DeFi concept. Because here, what are the basic or underlying the principles for framing the DeFi that is to be understood by the all the participants. Digital currency or virtual currency. Today, virtual currencies are increasing. Central bank digital currency or digital or virtual currency. And crypto is also a digital or virtual. It is a private and the central bank is a issued by the regulator, that is the Reserve Bank of India or the regulators of the country. The global shift is a digital currency initiated by central banks of the world to transition away from the physical currency. Today we are using physical currency. But for the last 2 or 3 years, if you observe, UPI payments are increasing. Last day, particularly the day before yesterday, I have visited to post office and I have taken the auto. And I asked him, I have the auto fare is 60 rupees and I have given 100 rupees and 40 chain. No, sir. If at all UPI is there, my QR code is there. You scan it and pay it. No change. Our people are habituated. They are shifting from physical currency to the digital currency. Physical currency is underpinned by the backing of the currencies of the central banks of the across the world. Across the world, all banks they are shifting from physical currency to the digital currencies. Digital currency is a currency that is available exclusively in the electronic form. Whatever the physical currencies are there in India, the physical currencies are 1 rupee, 2, 5, 10, 20, 50 rupees, 100 rupees, 200 or 500, whatever the denominations are there, the same denominations are available in the digital also. Electronic versions of the currency already dominate most of the countries in the financial system. Okay, for the convenience of the people, digital currency is introduced. But for smooth sailing of the financial system of the country, whatever the markets are there, whether it is a capital market or money market or commodities market or forex market, whatever the markets are there, all markets are using the electronic versions of the currency. A central bank digital currency is a digital currency, central bank digital currency that is issued by the overseen by the country's central bank. Central bank CBDC, central bank digital currency. More than 100 countries are exploring the CBDC. Today, if you see on the globe, more than 100 countries. In one level or other, some of them are on the research level, some of them are on the pilot, some of them are roll out, and some of them are completed so many years. All these things are there. In those countries, the physical currency is gradually decreasing. And CBDC is available in the Central Bank of Bahamas. That is that digital currency name is Sand Dollar. And the Eastern Caribbean Central Bank Dcash, or Central Bank of Nigeria Naira, or the Bank of Jamaica Jamdex. And in our country, the Reserve Bank of India also introduced e-rupee. Just a few I am discussing. But 100 countries, they have already started, and some of them all pilot completed and rolled out also. And in the future, if you want to see the physical currency, it is very difficult. And China Digital Yuan, one of the largest CBDC launched its a pilot project way back in 2014. They have no 8 years completed. They no 10 years completed for the CBDC of China, and it is used by the China's people. But in India, digital rupee is there. Most of the people may not aware of it. That is called e-rupee. It is available in two. One is retail, second one is wholesale. The financial markets, particularly banks or insurance companies or money markets or government securities market, all markets, they are using the e-rupee wholesale. But whereas individuals like us, we are using the retail. That's right. e-rupee R is there, e-rupee W, that is a wholesale is also there. Wholesale is for the financial institutions and corporates, but whereas retail is for individuals. The digital rupee. How the transformation is happening? Because for DeFi also, the virtual currency or central bank digital currency is also useful to do that particular functionality or the system. India and Europe launched it with the advent of smartphones. Today, some other people, even though they are not having the the refrigerator in the home, but they are having the smartphone cost 20,000 or 25,000 like that. Some of the people, they are purchasing the smartphone for 60,000, Apple and other companies. Rest the digital payment system. Today, a bank in your hand. Bank is in your hand. Not you need not visit to the branch. The bank in your hand is the mobile banking. And also rolled out in own CBDC known as e-rupee. On account of this smartphones rise, digital payment systems in India rolled out the central bank digital currency by our regulator, that is Reserve Bank of India. e-rupee in the form of digital tokens. We are calling notes in the physical, but in the e-rupee, it is called digital tokens, which represents legal tender of the money. 1 rupee token is there, 2 rupee token is there, 5, 10, 20, 50, 100, 200 and 500 tokens are available. All are prefixed with number. If at all I am giving 500 rupees note to you, and this is recorded in the central server of Mr. Prasad has given 500 rupees note to all the tracking systems are available in the CBDC. Gradual phasing out and physical. Even once I have seen the Autowala or coconut vendor, he is also asking, sir, QR code is there, you pay that one, I don't accept cash. Some people, they are not accepting cash also. If at all QR code is there, either Google Pay or Rupee Pay, whatever it is there. Physical currency denominations in the country. Reserve Bank of India launched CBDC in 1st November 2022, that is e-rupee wholesale, and 1st December 2022, e-rupee retail, and thus marked a new milestone for digital payment system of our country. Presently, CBDC has its component based on the blockchain technology. Everywhere we are talking about blockchain. It is an advanced technology. And the data is split into the blocks, and it is very difficult to hack that particular data, and security is more in the blockchain technology. So CBDC is also in the blockchain. It is very difficult to hack and to transfer your funds from one account to another account. Current information, particularly the CBDC Reserve Bank of India current information. Achievement to push up to transaction by offering incentives to the retail users. Earlier, particularly in 2003 or so, when the IRCT is introduced, when I have booked the railway ticket, they used to send travel bag freely, because to encourage the people to do the online transactions. In the coming days, once you are want to if you are used to use the CBDC, some incentives are also going to give by the banks as the Reserve Bank of also the Reserve Bank of India may convey the information to the banks also. And dispersing the portion of employee salaries using ERP. If a bank's employees are getting their salary on CBDC, definitely they have to use some portion out of the total salary, 25% CBDC, remaining 70%, 75% to the savings bank means to use that 25%, they will use the transaction, then the transaction will increase and the penetration level of the CBDC will also increase. And the Reserve Bank of India target is a daily 2,50,000 transact to 3,000 per day they have targeted, and that budget is also they are achieving. Now, in India, at present, if you wish to have the digital currency in the form of e-retail can be facilitated. They are available in the public sector bank as well as private sector banks also. And they will upload your app, particularly the Reserve Bank of India app. And if at all you give the whatever 50,000 by debit to your account or cash, immediately that coins will come and you can use that coins for various purposes. That is available. Today it is not a new concept. It is introduced in 2022, that is 1st November 2022. The benefits are faster payments, cheaper international transfer from one country to another, 24/7 access, and without internet also, it is possible to transfer the funds from one account to another account. And more efficient for government payments also, the CBDC. And there is a difference between UPI and CBDC. For localized use within the country, currently in India, we are using UPI. And if at all you want to use other country, cross countries, particularly beyond our boundaries, some countries are also using the UPI that is there. And a digital connection without internet connection also, CBDC can be used. Tracking and how the rupee 500 rupees is moving from one person to person, another person, all the tracking history is also available in the Reserve Bank of India server. And chargeable in future, if at all UPI is chargeable, then there is no other way to the public to use CBDC. Because like a currency, there is no charges. We are taking the currency. Reserve Bank of India is not charging anything. And even though they are incurring a lot of amount for printing of the currency, but they are not recovering the amount from the public. Third party involvement, particularly in UPI systems, the third party involvement is also there, like Google Pay or Rupee Pay or Paytm, etc., etc. And if you see the CBDC, and in future, once it is penetrated, full implementation was happen, ATMs will disappear, currency just will disappear, cash counters at the branch will also disappear if a full-fledged implementation of CBDC. Particularly for printing of the 1,000 rupee, the 1,000 notes of 100 rupees, the cost incurred to the Reserve Bank of India is 1,770. For printing of 1,000 notes of 200, it is incurring 2,370. Printing of 1,000 notes of 500 costs 2,290. So in addition to that, the Reserve Bank of India every year they are increasing, they are incurring to the tune of 5,000 crores. Once the CBDC is increased, then automatically all these things will reduce. And not only that one, transportation cost. In India, Mysore, new notes printing, Salboni near Calcutta, new notes printing, and Madhya Pradesh, Devas or Nasik, the notes printing. All these from there to the currency chest, a lot of transportation, security cost, all will be reduced once the CBDC. But why I discussed about CBDC means, CBDC is a virtual currency. In future, this is useful for the fintech also. That's why I discussed about the future. Now, other than CBDC, private currencies are also there. That is a government currency. That is the guarantee given by the Reserve Bank of India. That's why all notes, I promise to pay the bearer a sum of rupees so and so, and the governor's signature is there. Like that, the private currencies are also there. That is also virtual currencies or digital. The virtual currencies are there. Private currencies are called cryptocurrency. There is no difference between technology-wise the cryptocurrency and the digital currency. Emerged globally. Both the CBDC and the private currencies are virtual currencies. Okay. Now that part is over. To understand better about the decentralized finance DeFi, we should know about the intermediaries. So in the DeFi, intermediaries are not required. Not required. One to one, that is a P2P, person to person. So in the intermediaries are not required in the DeFi. That's why first let understand the intermediaries step by step. Currency, intermediaries, step by step. Then we will easy to understand the decentralized finance. What is the intermediaries? More channels of distribution in a product are supplied by the companies to customer, increase the price, delay cost. Earlier, I have read in the marketing, particularly channels of distribution. The channels of distribution, manufacturer to wholesaler, wholesaler to retailer, retailer to consumer, and some more people are also added in the channel. Thereby, the cost will increase. The cost will increase, the price will increase, and the delay will also happen. That the intermediaries are to be reduced. In the similar manner, in the financial system also, financial intermediaries are also there. Include financial services, particularly if in the financial system also intermediaries are cut, then your investment returns will increase. Because the intermediaries are eaten away your revenue, your surplus, your profit, all these things. The intermediaries are to be cut down. That is the central theme of the decentralized finance. So in the similar manner, more financial intermediaries can include in the financial services the possibility of lower investment, mismatched goals, credit risk and market risk. All these things are happening. One to one, that is the best. That is the best policy that is implemented in distributed or decentralized finance DeFi. If you see the top direct selling companies from manufacturer to customer, thereby the intermediaries cost, whatever their profit or whatever the additional cost, that is reduced. That's why direct selling is some companies are there. So many companies are there. I have mentioned only these companies. Here, the cost of a product is very less. But in the meantime, in the similar manner, intermediaries are also there in the financial service sector. Particularly if at all your savings are there, if you keep it in the bank is an intermediary. Your funds are safeguarded by the bank and your funds are used by the bank and they are giving the loans to the others. If at all any loss is there, a bank is collapsed, then you are facing some problem. So the intermediary for your savings are banks. At the same time, regulators are also there. For those banks, the regulator is there. All can be cut down in decentralized finance. It is possible once the technology base is available. Once the technology base is available, to keep your savings, banks are intermediary. At the same time, if at all you put your funds in mutual funds, there also intermediary is there. That is fund managers. There also regulators are there, Securities Exchange Board of India or Association of Mutual Funds, self-regulatory organization is there. And if at all you are want to do the trading in shares or investment, then NSE, BSE come into the picture. That is intermediary. And they are also asking some amount. And for that Securities Exchange Board of India or Ministry of Corporate Affairs, all people are the regulators directly or indirectly. And to cover insurance products. If at all you are want to insurance, IRDA, particularly insurance companies regulate the intermediary, and the regulator is IRDA or the Government of India. So in the DeFi, these intermediaries are removed or they are not involved in the process one-to-one. Thereby, the person who is going to lend or who is taking the fund, they can interact with each other. And whenever I am going to give any amount to the other person, I can judge once or twice. It is not a money lending. It is not a money lending because the business is entirely, the rules of the business is entirely different. So I can understand the borrower and I can demand whatever the rate of interest is, the full amount I will be benefited. This is funds belongs to me. That is the central theme of the decentralized finance. More intermediaries leads to decrease in the margins. As I told earlier, manufacturer to wholesaler, some profit, wholesaler to retailer, some profit, retailer to the consumer. All if added and costs are added, the price will increase. The customer is not getting a lower price. So I have to cut down all the flaps, whatever the intermediaries are there. That is possible in decentralized finance. Increase in cost and the transaction delay. Transaction delay is also happening. So the DeFi is the main theme is cut down the intermediaries. One-to-one only. How it is possible? All these things in the coming slides I will discuss. Currently, your savings are being deposited in the bank, which subsequently lends the funds by the bank to the other in the form of various loans and advances. Hence, we are using the funds. Hence, we are using the banks to act as an intermediary for our savings. We are using the banks as an intermediary. My intermediary is my bank. My funds are a bank is giving loans to others. If at all I am having 10 lakhs, bank is giving one loan 10 lakhs to others. My funds, that is my funds. Bank is an intermediary. They will recover the amount and pay to me. And they will pay less amount and they will recover more amount. And if at all they are doing wrong things and the credit appraisal is not up to the mark, then who is the sufferer? I am the sufferer. The depositor is sufferer, not the intermediary. This process involves trust in the bank. That's why most of the people, they believe the bank, not like cooperative banks, not a private sector banks. People are believing the government banks for your invested funds. In case of intermediary failure, particularly the Punjab Maharashtra Cooperative Bank, or 3 years or 4 years back, the Yes Bank is also some problem is there. You will receive only DSCGC up to 5 lakhs. If at all your funds invested in the bank by way of a fixed deposit or a recurring deposit 20 lakhs, you will get, once the bank is failed, you will get only 5 lakhs. That too, the subsidiary of RBI, you will get 5 lakhs. Opting directly engaging with the borrower instead of through banks can result. If at all you are taking intermediary as a bank, and if at all you delink that one, you will get higher interest. Risk assessment done by you only, not by the third person. And given absence of intermediary in your direct lending activities. So, if at all your caliber today, The people are knowledgeable people. Earlier, in earlier, the knowledge is very less. That's why we are taking the services of the intermediary. Today, there is no need to take the services of the intermediary. So that is the main theme of the decentralized finance. So that is a P2P. That is a P2P. Before going into the subject, particularly decentralized finance, you have to understand what is meant to be smart contracts. You have to understand the digital currency. You have to understand what is meant by intermediary. You have to understand by what is meant by smart contracts. Then only we will travel to DeFi. Suddenly, if at all I talk DeFi, and most of the people may not understand properly. Then the smart contracts. What is a smart contracts? The smart contracts are also originated in the world. It is the electronic base. Today contracts, Indian Contract Act. Indian Contract Act, the particularly we write the agreement and the stamping and registered, and I have to keep it the documents with me. In case the contract is failed, then I have to approach the court. All these things leads to cost, leads to delay, leads to liquidity problem. So the smart cards is today across the world, the business people are using smart contracts. What is a smart contract? Smart contracts are digital programs stored in a blockchain technology. Even you need not go to the stamp vendor, purchase the stamp. Even today, last week, I visited to stamp vendor for purchasing 100 rupees stamp paper for rental agreement. He has taken 200 rupees. What is the boss? 100 rupees stamp? Why you are taking? No, sir. If you want, you take. Otherwise, leave it. So the smart contract digital program stored on blockchain technology, that is also available. When the predetermined terms and conditions are met, these contracts are automatically executed. That is the beauty of the DeFi. DeFi is a virtual currency. DeFi is removing the intermediaries. DeFi is following the smart contracts. That functionality is available. That benefit is available. Contract means if you go to the bank for a loan, deed of guarantee, or a mortgage document, or a terms and conditions letter, or application form, or KYC, whatnot, one bunch. Some of the customers, they don't know ABC of the document, blindly they are signing wherever the bank wants. So when the predetermined terms and conditions are met, automatically, suppose if you are opening internet banking, or any your Gmail or whatever mails are there, if you give the user ID and password correctly, then only you will enter. Otherwise, one small space or extra dot, all are not accepted by the system. In the similar manner, the smart contracts also. So here, it is a straightforward concept, smart contracts, with huge implications. Instantly, low cost, all these things are there. Otherwise, no. Even a CBDC, particularly one example I am quoting here. CBDC, once the bank is going to sanction one housing loan, a car loan, for purchase of car, the CBDC will be created to your account. And the bank will be mapped in the amount, CBDC amount, only for the purchase of the car, particularly the Maruti car. That is currency is not useful for any other purpose. Technology benefits are more. So the straightforward concept is huge implication. The number of smart cards cases are grew daily. More people to see the tremendous potential of the smart contract technology. The technology is gives a lot of comfort to the people, but sometimes some problems may arise. It is inevitable. So in that case, we have to bear it. Once we have enjoyed the fruits of the technology, at the same time, small issues, we have to bear it. If there is a dispute between the two parties, immediately the government through courts, third parties get involved. Third parties, all the people will involve it. Once the contract is failed, and we have to engage the advocates, we have to go to the courts, we have to attend, all these things are there. But smart contracts, it is a beautiful worldwide, this concept is there. They are happy with the smart contracts. In many cases, third party will also play a role in the creation of the contracts. Once a third party is involved in the smart contracts, then automatically cost will increase. If the court case is delayed, you will incur additional cost. At the end, whether the judgment is in your favor or not, all these things are there. So smart contracts means it is a beautiful contract. Go through the literature on the smart contracts that is available on the web, and how to draft it, how to they link to the particularly the blockchain technology and DeFi. All these things are available in the detailed available in the web box. Fortunately, in the distributed lending technology DeFi, intermediaries are no longer needed to oversee the contracts. Once you want to execute a contract, and first that the contract is to be vetted by the legal expert. After that, stamp duty. After that, both are to be signed. After that, photographs are to be enclosed. Today, smart contracts, no photograph, nothing. All these things are the smart contracts are available in DeFi without any extra cost, and these are good when compared to the physical contracts, physical paper contracts. Fortunately, in the distributed ledger technology, intermediaries are no longer needed to oversee the contracts. Using smart contracts is a game changer for many companies, sectors, and industries. Today, the business world, they are using the smart contracts. But in an emerging country like India, it is slowly increasing. And particularly whenever the goods are transferred, they sent to other countries or other countries to the country, we are using some smart contracts, particularly on the distributed ledger technology. Once the distributed ledger technology is there, the entire system is essentially trustless. Today, you are trusting the bank. No, my funds are safeguarded in XYZ bank or ABC bank, like that. But once all these things, decentralized finance or smart contracts, trustless, you only the technology, you have to trust the technology only. Entire system is essentially trustless. You do not need trust any other parties, such as brokers, particularly in exchanges, brokers, whether it is a commodity exchange or the investments, particularly the capital market, brokers, lawyers enforce or carry out the transaction. And in the main, this means smart contracts are fast and disruption free. That is one functionality that is available in decentralized finance. So it is a digital. Second one is no intermediary. Third one is smart contracts are also available in DeFi. Blockchain technology powering smart contracts creates immutable data and nobody can change it. Nobody can change it. Encrypted data adds a layer for the security of the transaction. So once all these security features are there, there is no problem for your contract or for your funds or for your lending or etc. etc. Smart contracts are run in simple transaction, but blockchain technology also works well in detailed transaction with exchanges involving multiple parties. Multiple parties contracts are also possible in the blockchain technology, that to smart cards. That is available in DeFi. That functionality available in the DeFi. Before going into details of DeFi, you should know about DApp, DAAPP, DApps. What is a DApps? Virtual currency, no intermediaries, smart contracts functionality, and DApp is also required. What is a DApp? DApp is a decentralized application that you access the logging into the directly with your wallet. So here it is a one application that is required. So the decentralized finance is also required. DApps is a decentralized application that you access by logging in directly with your wallet. Wallet means either a digital wallet, whatever the CBDC or the cryptocurrency wallets are there, that is to be integrated. Like your UPI is linked to your your wallet is linked to your particularly savings bank or no, like that. Similar. Once the people are habituated for this particularly UPI system, this is nothing. This is nothing. Dapps exist across many blockchains that support smart contracts like Ethereum or Avalanche or Polygon or BNB chain, etc. etc. So many are there. Connecting your wallet to dApps to earn interest. Once you are linking your DApp to your basic account, virtual currency account, take out the crypto loan or secure insurance against the crypto investments, etc. All functionalities are available. Decentralized exchanges. For this particularly, the decentralized finance exchanges are also there. In the world, nearly 151 decentralized exchange, that is called DEX. So virtual currency, no intermediaries, and particularly the dApps are required, and the smart contracts and DEX. With this, you can go for DeFi. Decentralized exchanges. There are 150 decentralized exchanges. Across the most popular is Web3 ecosystem is the best system. And the Alchemist dApp store, it is available. It is available in dApp store, particularly Google Store is also there. In the Google Store, apps are available, but this Web3 ecosystem is available in dApp store. Alchemist. Now we are entering into the DeFi. The future banking is self-service without intermediaries. That is the concept of a decentralized finance. Future bank is self-service and without intermediaries. And if you see the fintech, the government is also guessing by 2025, next year, India fintech market is expected to reach 6.2 trillion, that is $83.48 billion. All people, particularly knowledgeable people or educated people, are habituated to use the fintech wherever it is possible. That's why the future fintech particularly Andhra Pradesh state government, they have announced the Visakhapatnam is a fintech hub. So 2025 India fintech market is expected to reach 6.2 trillion. That is US dollars, $83.48 billion. That much expected growth is there in the fintech market. Now we are going into the subject, particularly the assembling of all the whatever I discussed. I am assembling that one. That assembling is nothing but a DeFi. Individually, I have told about this parts. One is a virtual currency. Second one is intermediaries. Third one is particularly the smart contracts. Fourth one is dApps. Fifth one is particularly the DEX. If you combine all these things, you can start the DeFi decentralized finance. What is a decentralized finance? Decentralized finance, that is called a DeFi, is a new way of handling money online without banks. I don't require the intermediary of banks. I don't require the intermediary of the mutual fund. I don't the intermediary of a BSc or NSC. I don't require the intermediary of insurance companies. All our intermediaries are cut. So using blockchain technology to let people deal with each other directly. That is the beauty of the DeFi. It makes many financial services like loans, trades, insurance quicker, cheaper and open more people than traditional finance. It will cross the boundaries of the country. Cross-border transactions will also increase. You are not restricted to within the country. You can move to other country people also with the help of DEX. Ethereum is a decentralized blockchain technology platform. That is a platform that is a blockchain technology platform is established to peer-to-peer network that secures, executes and verify the application code called smart contracts. So that a blockchain technology platform is working under Ethereum. Is a decentralized blockchain technology platform that establishes a peer-to-peer network that securely executes and verify the application code called smart contracts. DeFi, pronounced by DEFI, DeFi, is a short term of a decentralized finance. It is an emerging field that the participants cut out the middleman. That's why I told about the channels of distribution. The channels of distribution, the middleman to be cut. Once the middleman is there, earlier brokers, particularly today also, on account of brokers only, lot of amount wasted to the individuals. Otherwise, their income level will increase. Their spending will increase. And make a financial transaction directly with others. You need not ask the middlemen. But for this also, the rules of the business game is also very interesting game. And others, and it is quickly gaining the popularity as an alternative to traditional financial service. Earlier, CEFI, centralized finance. All people are contributing the savings bank or fixed deposit and centralized. These funds the banks are giving to various loans. No. If at all I am having 20 lakhs rupees, I can give one MSME unit working capital 20 lakhs. But whatever the rules of the game, particularly this business game, is there. That's why the fintech reshapes the country. This is happening in the world also. DeFi already let you do most of the things offered by the traditional banks. And the centralized financial institution with the new products and transactions available each day. Whatever the central banks or centralized financial institutions are offering, all are available in DeFi, and innovative products are developing on day-to-day basis. It's a let participants use cryptocurrency to provide most services that traditional banks which offer government issued fiat currencies. You can use the cryptocurrency as well as a central bank digital currency also. Decentralized finance is not, that's why I discussed about CBDC, central bank digital currency. In future, all these things are also possible. Lend. You can lend, you can borrow, you can earn interest, you can trade the asset, or you can buy the insurance also, and much more that is available in DeFi. DeFi services tend to faster, cheaper, more simple, with new advantages and service being offered each day. Particularly the mobile apps or particularly the online platforms. Innovative products are coming. Innovative products. Today in the bank also, pre-approved loans. You need not visit to the bank. The system will scan your data of a savings bank, your data of your record of the loans earlier and CIBIL, and they will generate one link, and whatever the eligibility amount they will give as a pre-approved. For that, demand promissory note is not required, application is not required, KYC compliance already done, that is also sufficient. Decentralized finance, on the other hand, delivers the whole host of advantages by enabling people to transact through financial application via blockchain network. Cut out the intermediaries such as the traditional banking groups. And DeFi uses a smart contracts. Whatever I discussed earlier, the smart contracts, that facility is available in the DeFi, and they don't require a traditional financial institution to act as a guarantor for transactions. If at all I am going to take any loan from the bank, then I require some guarantors. That their net worth should be more. Once their net worth is more, then only they will take. But all these things are participants, particularly act as a guarantor for transaction participant in decentralized ecosystem instead of transaction with each other directly. And the transactions are secured by the blockchain technology. Most of the DeFi products are don't take a custody of your funds, allowing you to remain the control of your assets. Whatever the assets are there, whatever the loans you are given, or whatever your funds, digital funds are there, whatever your investments are there, all are safeguarded in the blockchain technology, that too secured code. The emerging of a DeFi system offering technology platform for proper use of your funds. That is the important. Today, if at all you are invested in a bank, particularly in the savings bank, how much interest you are getting? 2.70. The same funds banks are using for loans for 11%. 11% minus 2.7, that is nearly, that is 3%, 8.3% profit the banks are getting on account of your funds. But in the DeFi, you will get 11% minus whatever the transaction cost is, that will be deducted. That's all, nothing else. So the proper use of your funds investment. Second one is you are the judge. You are taking a decision to give to whom. Because your funds are taken decision by the others, the bankers, the credit officers. If at all the credit officer is not up to the mark, your funds are lost. So proper use of funds towards investments, towards trading, towards trending lending and other related financial activities. All these things are happening in the decentralized financial DeFi. A significant development, particularly recently it was happened, that is May 17th, 2024. The India's crypto landscape, the Securities Exchange Board of India, SEBI, has recommended several regulatory overseas crypto trade nationwide. Shortly, once once this has happened, particularly whatever the efforts made by the SEBI happened, and the government is given permission, then the technology platform of the trading is entirely different, not through BSc or NSc. So the significant development within India's crypto landscape, the Securities Exchange Board of India has recommended several regulators overseas crypto trade nationwide. That is the news of May 17th, 2024. If you see the trading that is happening, the crypto means that is a digital currency, that is a virtual currency. Crypto is not it is a private currency, not public currency. Public means the government currency is called CBDC. Some countries CBDC is also allowed to do the DeFi transactions. What is that one? Latest crypto prices based on the market cap from 16th July recently indicate the global crypto cap $2.3 trillion, reflecting 1.07 increase from the previous day. Every 24 hours, the growth rate is there in the virtual currencies, particularly the cryptocurrencies. So the government of India is also thinking about how to overcome this problem, and they are also going to, that is my perception thinking, they are also going to give some directions in this regard. Furthermore, the total crypto market within 24 hours is $91.87 billion. The growth levels are increasing. Notably, once the crypto market volumes are increasing, DeFi volumes are also increasing. Notably, the DeFi sector currently contributing $5.5 billion in volume, representing 5.98 of the total cryptocurrency within 24 hours. That is, the data is on 16th July 2024. That much trading transaction. Every 24 hours, the market is booming like anything. Now, it is a self-service banking or financial system. The financial system, the promoter, the boss, or the operator, all are you only. That's why it is called a self-service banking system. It is available in the fintech companies are started, and India also encouraging fintech. GMs are also told about the Reserve Bank of India. Also, they have created fintech department, and internationally some regulations are also happening, and for smooth sailing of this fintech in the world, the governments, particularly the regulators, are also taking some measures. So the fintech, particularly the DeFi, is an umbrella peer-to-peer, individual to individual. It is a P2P, no intermediaries. Financials are on public blockchain, primarily Ethereum. Ethereum is a decentralized global software platform powered by blockchain technology. It is the most commonly known investor for the native of the cryptocurrency, that is the Ether, ETH. And by the developers of the blockchain, decentralized finance application development also happened on that particular platform. As a blockchain platform supports decentralized apps, dApps, and smart contracts, Ethereum is naturally suited for DeFi. That's why the technology base of a DeFi is Ethereum. By Ethereum, particularly the blockchain maintains the transaction history. Transaction history is available. Whatever your transactions are there, all are available. And the status of account, while either or other cryptocurrencies are used as assets, the total transactions end to end is available in your account. Smart contracts are turned into used by the decentralized apps, giving a way of no innovative smart contracts. As DeFi is an open source movement, its protocols and applications are widely accessible. It is accessible anywhere because it is working under different protocols and applications. That's why it is available everywhere. Even India or any the other countries are also the DeFi is available. Ethereum is also flexibility is there. If at all DeFi wants to increase the number of products that supports the software supports, enables the developer to build the dApps with ease. This is a flexible means of already DeFi solution for most financial services. With the ongoing possibility of creating new innovative products are also possible with the Ethereum, that a particular software that is the base of the DeFi. Since many of the DeFi applications are built in Ethereum platform, many of these products can work together seamlessly. So that's why it is a strength is there. Next, easy to understand. And whatever the digital currencies are there that can be traded, and your investment will increase, and intermediaries are curbed, and smart contracts are also available, and the dApps, whatever the DEX, the 151 exchanges are also there, and exchanges 150 also to be connected. Your particular app is connected with 151 exchanges. So wider scope is there for your transactions, for your trading, for your lending, for your investment, or for your business transactions, etc. DeFi lending. Rapidly growing popularity, DeFi lending allows you to lend digital assets to other while earning interest. Lenders can pool their assets with others. Suppose one person asked the bulk amount, but in the DeFi, whatever the customers are there, 10 customers, they pooled together and give to the one borrower also. Setting terms to the smart contracts. Borrowers are generally need to post collateral in digital currency to secure the loan. The collaterals are also to be established. That facility is also there. That functionality is also available in the DeFi. This means a borrower can, for instant access funds. If at all you require funds, easy to access. In a major coin such as a Bitcoin or a digital currency, while posting collaterals is a more unclear cryptocurrency. If you borrow through DeFi, provided you make interest payments, you can access a Bitcoin without having to sell your collaterals. And in some cases, you can even borrow an amount larger than your collateral and you provide. The collateral is the security, the additional security. And based on your credentials or based on your information that is available in that particular DeFi platform, you will get more funds also. How does DeFi make money? Okay, for what purpose they are doing all these things? All people they are accessing the but development of the software, particularly by the dApps. For what purpose they are doing? DeFi makes money on several ways, including transaction fees. But intermediaries are curbed, but they will charge some transaction fees. That transaction fees is peanuts. Based on volumes, they are getting more amount. That's why they are developing this one under blockchain technology. Through investments, particularly whenever you are doing investments or trading or lending or investments, all these things, the DeFi will get some transaction fees. Participant can earn returns by providing liquidity, borrowing, lending, and trading the asset in a decentralized exchanges. DeFi can be basic premises of a Bitcoin, digital money, and expands it, creating a digital alternative to stock exchanges. It is an alternative to stock exchanges. You need not trade your investment shares in stock exchanges. It is also available. This platform is also for a trading of your investments, but without all associated cost. If a stock exchange is there, they will charge some amount because there are big towers, trading floors, banker salaries, all these things are there. But here, only software. That too, it is distributed to all the participants. This is a potential to create more open across the world. It is possible, free and fair financial market, and that is accessible to anyone with an internet connection. If an internet connection is there, smartphone is there, and digital currency is there, or a cryptocurrency is there, then you can go for the DeFi. What is the benefits of the DeFi? The benefits of the DeFi are open. You don't need to apply anything. Open account, just access and create a wallet. Simple process. Pseudonymous, you don't need to provide your name and email address and any personal information. All are captured from your wallet. And flexible. You can move your asset anywhere at any time without asking permission, waiting for long transfers to finish and paying expensive fees. Fast. Interest rates or rewards are often updated rapidly, as quickly as 15 seconds. Today, the interest rates. Earlier in my childhood, the Reserve Bank of India changes the deposits or loans interest rate every 1.5 years or so. Today, on account of repo rates or bank rates, the changes are happening frequently. But in case of the DeFi, the rates or rewards are every 15 seconds. Changes will happen based on the market dynamics, and can be significantly higher than the traditional stock exchanges. So traditional stock exchanges, particularly it will be closed by 3 o'clock or 5, whatever the timings are there, and morning timings, but it is around the clock. Round the clock. Transparent. Everyone involved can see the full set of transaction. Private corporations rarely grant that kind of transparency. Whatever your transactions are there, it is available. But a government organization, suppose I take for example, if at all you are having a bank account, okay, through internet banking you can see that now you can see your transaction. But the total transactions, all charges, all are the data analytics type of transactions are available in the DeFi. Earlier, if at all you want to know the transaction, you have to take the account statement. Today, the account statement is not required. Why? Because internet banking is there, or up to 30 or 10 now. Mobile transactions are also visible on your app also. Conclusion. Now, the decentralized finance is one of the new technology platform that is available without intervention of intermediaries to individual transactions. Thereby, it is a speed, secured, and safety, and the benefit accrued to the individuals will be increased. But at the same time, technology knowledge is required. Technology knowledge, if not there, then it is impossible and impracticable also. So that's why to get the reasonable, particularly your funds or investments, whatever the reasonable profit is there on your investment, that is possible in the decentralized finance system. Here are some of the people are engaging the DeFi today. The people are lend out your crypto and earn interest and rewards every minute, not once per month. In the traditional SIFI, centralized finance, at the quarter ending Q1 or Q2 or Q3 or Q4, all the monetary authorities, whenever they are changing the rates and all these things, then only the customers or the borrowers, they know about their lending rate or the banking transaction rates. Getting a loan, obtain a loan instantly without filling in the paperwork, including extremely short-term flash loans and traditional finance institutions don't offer. Today, if you go to the bank for a housing loan, it will take a minimum 10 days now. Earlier, 30 days. The turnaround time is also reduced drastically. And once the builder is project is approved by the bank, then they will complete the formalities with less than 1 day, 1 week also. And earlier, to get a bank loan, particularly the car loan, it will take a minimum of 1 week. Today, within 2 or 3 days, they are getting. But here, the flash loans are there. That traditional institutions don't offer the flash loans. They have to study the creditworthiness of the borrower. They are verify the income statements. They have to verify the collaterals. They have to verify the pre-sanction survey, post-sanction survey, whatever. All these things, the systems are there. All these things they have to follow. Then only they will give the loan. Trading. Here, peer-to-peer trade. Certainly, crypto assets, as if you can buy and sell stocks without any kind of a brokerage. One-to-one means brokerage will reduce. That's why more applications are available in the country also. On account of the middleman is stopped. Today, whatever the Amazon products we are getting, that is low cost products. Still further reduction is possible. Why? Because directly manufacturers are providing the goods to the Amazon. Amazon only the platform is a technology platform, nothing else. Saving for future, put your crypto or whatever the digital into savings account alternatives, earn better interest rates than you had typically get from a bank. Today, the bank rates, the not linked to the inflation rate. Today, if you take inflation rate as a 5 to 6% range, and a bank offering a 2% interest, 2.7 means you are getting the interest, negative rate of interest below the inflation rate. But for your investment, better rates are required. better profits are required, better earnings are required. Otherwise, your investments are eaten away by the inflation rate. Eaten away by the inflation rate. That's why you should not keep your funds in the house. Because last year, 100 rupees on account of inflation, after 1 year, it will become 95 rupees inflation rate. That's why you have to invest. And once you invested, then only you will get some earnings. Buying derivatives in some crypto versions, derivatives are also available. Risk mitigation products are also available. Make long and short bids certain assets. Think these crypto version of stock options or future contracts all are available. Particularly derivatives, forward contracts, future contracts, options, swaps are available. In some decks, this is also available. So in future, particularly the DeFi application gives all your financial matters effectively and efficiently. For that, knowledge is required. Knowledge means not only the financial literacy, but also digital literacy is also required. So once a digital literacy and financial literacy is there, DeFi is nothing. To know more for tomorrow's banking system, today banking system not useful for tomorrow. Rapid change that is happening. The BFSI board of the institute is offering the FinTech course. So if you want to learn more concepts about the FinTech that is happening in the world, the BFSI board of our institute is conducting FinTech course, which is a reasonable fees and all these things they are going to declare shortly. That is an advanced certificate course on FinTech. If you wish, you can enroll that one to take the advantages of the latest developments that are happening in the BFSI, the particularly BFSI sector. So I wish you all the best. Thank you very much for giving me an opportunity to discuss about the basics of a DeFi and the concept and what are the various functionalities that are available in DeFi and with the simple and lucid language. And the details, full details are available in the website also. And if you want to do, first of all, the digital literacy, next the financial literacy is very, very important. That's why I put the disclaimer clause at the starting of the particular presentation. So thank you very much for the BFSI board for giving me an opportunity to discuss about the DeFi. Thank you. Thank you very much.
Thank you, sir, for such an elaborate presentation as always. So, sir, we have one question from Chandrasekhara Raju, sir. Is it possible for a common man with little academic knowledge to use digital currency? And is digital currency safe from cyber attacks?
Madam, the CBDC is also digital currency. The Reserve Bank of India, whatever the security measures that are required for a common man angle, not a educated level angle. And even in a common man who is living in the villages, where there is no internet connectivity is not there, the CBDC can be transferred from one account to another account without internet also. That is called UPI 123. And they have specially designed the mobiles also. Today, particularly the rural people are more educated in technology when compared to us. Why? Because they are having plenty of time. Once the sowing of the crop up to harvesting, that is they are called seasonal unemployment is there. They can push the buttons, whatever the buttons are there in the system, and they will understand what are the various functions or functionalities that are available in the mobile phone. So even Amazon also thinking about how to penetrate the products to the rural India, where the population is more and consumption is also more. Even in some parts of the country, some states, even whatever the biryani and other things, they are supplying to the rural people also with the apps. And the rural people, if they use that app, there is a tremendous growth will be there in the digital transactions. That is possible because as a layman or as a less knowledge person, I'm thinking like that. But a Reserve Bank of India, they are taking into consideration of the rural people, urban people, metro people, and cities. All they will take into consideration. Then only they will implement whatever the initiatives are there.
Ramisha sir has asked, if DeFi is operative, will there be more unemployment because of reduction of intermediaries?
Madam, I'm talking about 1984. At that time, I worked in Tirupati, Lord Balaji temple. At that time, when I get down from the train, mass people, they are using the stones and throw on the glass pans of the reservation counters because computers results unemployment. We don't require computers in developing country like India. Today, if you stop the IRCTC online, again they will throw the particular same stones on the railway, particularly the inquiry counters, etc. Because the technology already tested by the people. Today, the employment opportunities, three important sectors are there in the country: primary, secondary, tertiary. The tertiary sector means the service sector. In the service sector, IT sector absorbs more employees. Today, I have seen in the Economic Times that Infosys is going to recruit 20,000 people. So, technology, one side it may reduce, the second alternate side it may increase also.
Sir, Karthik he has asked, sir, there was a requirement for Amazon not to invest in their suppliers. Please comment on this in present status.
What, madam?
There was a requirement for Amazon not to invest in their suppliers. Amazon. Please comment on this in the present status.
Madam, I hear today Amazon, they are not procuring the stocks and preserving the godowns. Whenever the order is placed by the customer, directly that message goes to the supplier, manufacturer. One example I am quoting here, only one example, small example with regard to Amazon. Last month I visited to more MO or a more mega mall shop that Super Bazaar. In the entrance, Amazon cartoon boxes are there. I astonished. It is more. Why these cartoon boxes? Immediately I inquired with that manager. What is this Amazon boxes here? Immediately he told, sir, we are tie up with Amazon in Banjara Hills or particularly the Panjagota, where this more is located. Surrounding people, if at all they required any provisions placed in the Amazon, immediately the message will come. We will put that stock in these boxes and my person will go and deliver it. So thereby, Amazon is not procuring the stocks, more is procuring the stocks. Amazon is not storing the stocks, more is storing the stocks. And only the intermediary, The Amazon is only the intermediary.
So much, sir.
Mhm.
So with this, we've completed this question answer part. So I would now request our HOD sir, CMA Dibyendu Roy sir, is the additional director, secretary and HOD of our BFSI board for the vote of thanks.
Thank you, Indrakshi. Good evening to all of you. And after this enriching session, we wholeheartedly thank CMA Dr. P. Sivarama Prasad, who is former AGM of State Bank of India, for continuing his good work and excellent deliberations for this topic of DeFi decentralized lending. We also thank CND P. S.F.N. Rao, who is General Manager of IT Loans, Trade Finance of State Bank Global IT Center, Corporate Center of Navi Mumbai, for today's Chief Guest of Honor for the second webinar of this banking month observed by BFSIB for July 2024. We also thank CMA Ashwinji Dalwadi, President, ICMAI, and CMA BB Nayak, Vice President, ICMAI. We also thank our BFSI board members for their kind support and guidance for various activities undertaken by the department. We thank the IT department, CPD department, and other departments for enabling today's webinar. We also thank our team members, Indrakshi, Devabruta, and others for helping today's event to materialize. Our next webinar would be scheduled in the month of July 26th, and the name of the topic is Open Banking. We request everybody to join that session. With this, we close today's session. Thank you all.
Thank you, sir. Thank you, Rao.